Well done, everybody. Congratulations. The largest anticlimax in the history of Bitcoin. So tell us what's been happening this morning. Update us, because we've been recording a podcast. All I know is I woke up and the price ran up to 49K. I was like, it's here, it's happening. And then we've retraced back down. I don't know what the hell's going on. What's going on?
Well, I mean, 11 Bitcoin ETFs started trading. But so what we're trying to do in BI, Bloomberg Intelligence, is try to figure out, like, how do we measure this race? And it's hard because we can compare it against BITO and some other things, but those are like single fund launches. Because, like, if you look at this, one, GBTC was already a super liquid product. It traded hundreds of millions a day. Right now, it's almost 2 billion alone. But you can't really use that as a launch because it was already a successful product. And honestly, we'll get into what we think is happening. That's probably a lot of outflows.
Well, that's what we question. Yeah.
So there's a lot. There's no way to know. I think a lot of the money, there's going to be significant inflows into these other ETFs. I bet you a lot of that money is like literally reshuffling from Canadian ETFs, from GBTC, from BITO, which is the Bitcoin futures ETF here. So there's going to be a lot of money shuffling. So I don't know how much of this is net buying, but also you got to remember, you're unlocking GBTC, which owns how much Bitcoin? 330,000 Bitcoin, I think. Is that the right number?
25 billion or something dollars
they're
worth?
$27 billion worth of Bitcoin. Some of that's going to be selling. It's just how much of that selling is going into another ETF.
Right. Okay. So, okay.
Right. There's no in-kind redemption, right? So any outflow requires the sale of Bitcoin.
Correct.
But to James's point, if then they're just like, well, I actually want to just get out of this thing, go into BTCO or IBIT or FBTC or whatever these other ones are. Well, that is a create that requires buying. So it's not really. Actually, I think I would characterize the price action today as like pretty flat in the scheme of things. I mean, obviously at 9:30 we hit 49K basically in the morning, and it's been then we basically went back to the 46 area where we've been for. Like if you drew a line from before the fake SEC tweet to like now, it would basically be flat.
Well, in fairness, like if the ETF news had been a surprise, we would have seen some kind of God candle. But it's been so discussed, and kind of even a few weeks ago, we were like probably like when did you hit 90%?
We hit 90% on October 12th initially.
Yeah.
So
was that when they didn't appeal? Or they didn't ask for the
it was
full
right
hearing
around
or whatever?
The reason we went to 90%, it was right around when the SEC, we knew they weren't going to appeal the court decision for Grayscale. But we really went because that was when we heard that the SEC. So like everything we've done is that 19B4 process I talked about last time I was on your pod. Like this is applying, there's deadlines, whatever. The SEC usually just goes radio silent, delay, deny. What we heard after the Grayscale lawsuit, and there's another process that needed to happen for these things to list, and you need these prospectuses, legal documents. You need the sign off from the SEC on those too, but that's usually just like something that needs to happen. It's not like this long drawn out process. It ended up being a long drawn out process, but that's where the different division of the SEC. We went to 90% because all of a sudden this division that had never cared, never given comments on these Bitcoin ETFs in the past, all of a sudden was sending comments back. And it was like, oh, all right, this is a complete change. Yeah. And the Grayscale case is being affirmed. We're going to 90%. And for the most part, people were like, these people are insane, which was fun. But yeah.
Well, like I would say we're 100% a week ago. Right. We all knew, right? So if we all knew, all the advanced trading was done.
Well, that's what's so interesting is like, so it was priced in. I mean, and it wasn't a sell the news event, or it certainly hasn't been yet. We'll talk about outflows. There's structural reasons why there can be selling, but I didn't wake up and see, let's immediately sell the news at all. Right. No. And so I guess markets are efficient.
Yeah, I mean, if you had told me like 6 months ago that we were going to get an ETF approval and Bitcoin would be like roughly flat over the previous few days, I would have been like, you're insane. You don't understand what Bitcoin is or how it trades, but that's what's happened. It's fully priced in.
Yeah, and it's near term priced in, but the real flows that we think exist haven't actually started, right? Like they're going to take a while. We could talk about that, but like I think today's volume, to the extent there's net new volume, like it's retail, right? This is on fidelity.com now, and they're probably advertising their own there, right? So like, but none of the advisors are in yet. None of the platforms have turned this thing on. So it's a longer game than just day one, but I would say it's definitely not a sell the news event, clearly.
Can you help me understand the mechanics of this? Because this is what I don't fully understand. If I go to, pick one at random.
Can't go to Vanguard.
BTCO.
BTCO.
Invesco. Yeah, you go to Invesco.
Nice and random.
Yeah. You said pick one at random.
I think they're partnered with who Galaxy.
I think so. Yeah.
I'm gonna go with Brr because it's my favorite ticker. But just say I buy a share of that. Say a share's $50, right?
Yeah.
And I say I don't know, buy 100 shares. At the point I click buy, do I own that?
Yeah, basically.
I do.
Yeah.
So at the point I click buy, are they instantly buying the Bitcoin?
Well, it depends. I mean, you're buying the shares on the market, right? So they have a net create redeem requirement, right? They have to have the certain amount. And I think really they settle up at the end of the day, honestly.
Yeah. So it's the market makers that are doing this, right? So you might be buying a share from the market maker, and he's offering that to you at a certain price, and he's hedging that before he hands it over. And then at the end of the day, with that trading, they're going to net it out. Or it might just happen that the demand's so crazy during the day that they're doing creations. The APs are making new shares that day. But all you need to know is there is a time to settle that share that you bought. But functionally speaking, when you click buy, you now own a share of that fund. And de facto, you have rights to the underlying assets in that fund, in this case, spot Bitcoin. So when you buy this ETF, you're buying underlying spot Bitcoin. How long is it before that's actually spot Bitcoin in the ETF? It doesn't... For most people, it doesn't really matter. There's mechanics that I'm honestly not probably the best person to talk about.
But this is literally like premium discount to NAV stuff, right? So this is the tracking error or quality of a fund, right? It's how quickly and how often and do they need to create and actually redeem new shares to make sure that AUM is tracked by the price, right? So they may not need to. They may say, oh, well, yeah, Pete bought one, but actually James sold one. So like nothing changed, right?
Sure,
so and they manage that. That's one of the things that differentiates these products from each other.
But if they've got to fulfill the obligation of acquiring the Bitcoin, and the Bitcoin price itself is changing, if you look at some of them trade in with 25 basis points, there's not much room for error, right? There's not much room for slippage. So how do they ensure they always have enough of the underlying asset?
Well, the issuers themselves have every day, they have to make sure they have the amount, otherwise they trade at a premium or discount and they're a bad product, right? But to get it is something that you have to do fast. It's why the world's biggest market makers are the ones creating and redeeming these things, right? And also, to James's point, they can hedge. So they can hedge some of that. If you click buy and now they need more Bitcoin and it takes them 10, 20, 30 seconds to get that Bitcoin, right? They can have hedges on to protect from volatility.
Yeah. So the way to think about it is like you're buying. That means they're selling. They're net short. So they need to offset that somehow. So they're going to use another hedge. So they might go long one of those other ETFs or futures market or something like that. It's on a much bigger scale that this is happening, but they want to be delta neutral in this. And the way that these market makers make money is like they're selling to you for $1 and they're selling to you for $1.01 and they're buying it for $99.09. Jesus Christ. They're selling to you for $1.01. They're buying it for 99 cents. So that 2-cent spread between there is where they make money. And they're trying to stay neutral to the exposure of Bitcoin the entire time.
Just forgive James for his started egg. We did drink a lot last night. Okay. But is this all like kind of automated? There's all systems for this. Like no one worries.
I wouldn't say automated, but the firms doing this are the best firms in the world at doing this. Like there's a reason that Ken Griffin is a mega billionaire at Citadel. There's a reason Jane Street and Virtu are known as the best traders in the world. Like they're not entering this space with like blindfolds and they don't know what's going on. They're going to make efficient markets. Like this is literally what they do day in and day out. So I would trust. Basically, my only advice would be trust the ETF wrapper. Essentially, you can look at what's gone on in Europe. You can look at the ones that have traded in Canada. They've all traded very tight with very minimal premiums and discounts. Now, today and in the first few days, there might be like minor premiums and discounts because as things are getting settled with all the volatility, creation of shares, redemption of shares. But for the most part, over the long term, it is going to be an order of magnitude better than using something like GBTC's old version or using even BITO. BITO underperformed. If you look at from the entire year of 2023, BITO, the Bitcoin futures ETF, underperformed spot by 16%.
Wow.
So if I told you that there was an expense ratio to own this fund that gives you exposure to Bitcoin, but the cost is going to cost you 16% a year, no one would buy it.
No.
That's why this is more efficient because yes, you might have issues where you're not tracking 100%, but even the ones that have a hard time tracking and don't do as well as others are going to do better than everything else that's been available to people looking to buy Bitcoin on the traditional financial rails.
All right. Well, look, market's been open 4 hours. Like, what have you seen? What's your read so far?
A lot of volume. I mean, on the top line number, I think we were just talking about this at maybe like 3.5 billion about halfway through the trading day.
Volume is buy sell, right?
Correct. Yeah. So not inflows. We don't know necessarily what the AUM of these products will be. I don't think we find that out maybe till market close or even tomorrow.
After market close, we'll find out. So we basically the way that so I used to work on the team that took care of taking in those files and updating the terminal. And basically what it is these files say like, here's the change in shares outstanding. This is how flows are calculated, right? So if the shares went from 100 to 110, they're going to say, all right, 10 shares came in today. The NAV or the value of the fund per share is $1. That means $10 came into the fund. That's how it's simple. That's just how flows are calculated. So we're going to get that file 6 p.m. today, and then Bloomberg's going to calculate and try to look at the flows. The one caveat here is that like some of these funds, like the way that they're structured and the accounting works in the back end, we might not necessarily even see the flows for today until tomorrow's close.
Right.
So I don't know when this is getting released, but this is Thursday. So like we might not see what happened on Thursday for some of these funds until the close of trading on Friday.
Right.
So there's a lot of nuance here to try and figure out, but we have a good idea of probably what's happening based on the numbers. It's more of an art than a science, but you can kind of guess.
And the price of the share itself. Okay. How much has that moved? How much does that tell you?
That's a good question. I don't know. And I was going to ask about how I was going to ask James a similar question, which is like, is there any logic to this? I see like the IBIT shares trade at a lower unit price than say the BTCO shares. So it's obviously just the amount of shares to piece of Bitcoin. Like they're, right. They're not,
should there be,
they're all tracking the same thing.
Yeah.
So it's just a matter of like, some of them said that one share equals 0.001 Bitcoin. Others said one share equals 0.002 Bitcoin. Just the way they're.
But you shouldn't really profit any different amount from any of the shares.
Because your returns are based on price, percent, right?
Yeah.
So like some people basically went and we're just going to do 1/1000th of a Bitcoin, roughly speaking. So like if you look at it and it's trading at 47,000, these will be trading around $47, something like that, right? So that's what some of them did. Some of them, the standard one is people usually launch at $25.
Looks like what IBIT did.
Yeah. So like for the most part, that it doesn't matter. We call that the handle, what it's trading at. Some people like. A lot of stocks will like lower their handle in specific trading vehicles, trading ETFs that are leverage ETFs. They'll keep their handle low because like retail traders like seeing like I'm buying 100. There's a unit bias. So for the most part, at the end of the day, it doesn't really matter unless you like can't buy one share. But I mean, everything here is trading under the prices are under $50.
Well, this is one of the things I heard. That's a great thing about the ETFs is you're not selling something to somebody that's $46,000.
Yeah,
you're selling something that's like $25.
Broadly, all of them are cheap, quote unquote, right?
Yeah,
you're buying that. It should solve the unit bias problem to a large degree. I mean, no, you're not like, oh no, like you want to buy, let's say you buy a major, like a major tech stock, right? It's like you want it to feel cheap enough, right? You don't want it to be like, it doesn't matter. You already know you're getting some amount of the company based on the dollars you put in. So what do you care about the? So
the price of the share is based on the price of Bitcoin. Every single share should be within a 0.01%
on a percentage basis.
Should be about the same.
Yeah, like BTCO and IBIT, it should go up and down the exact same amount on a percentage basis every day if they're both properly tracking.
But can there be reasons why they don't?
There can be. So that goes back. So one, the fee.
Yeah.
There's a higher fee. Basically, the way the fee works, right? If you can think, I like to describe it as a termite. And if you think like you put all these assets in and that's your like block of wood and the termite takes a little bite, the bigger the termite, the bigger the bite and the more you're losing out over time. So like the fee really does drag on your returns, which is why people fixate on fees because everyone talks about leave your money in the market, it compounds, yada, yada, yada. But so do fees. Fees also compound. So if you can get a really low fee and stay in there, it's going to help you out over the longer term. But essentially the fee comes out a little bit every day. So the issuer is taking a tiny little bit of the Bitcoin out of the fund to do operations, essentially. So that's how that process works. But so the fee is actually going to, if you're tracking perfectly, theoretically, you should have the same exact return of Bitcoin over a given time period minus your fee. So it's over a year, it should be minus the expense ratio of the fund. And that's perfect tracking.
So is the issuer therefore selling a little piece of Bitcoin every day to cover the fee?
Yes, that's like what Grayscale does. So Grayscale was operating GBTC for a long time, and that's how they did it. They funded, but they didn't do it every day. I think they did it weekly or monthly or something. But now they're going to do ETFs for the most part. Do it. They do it daily just because of the way they operate and inflows and outflows.
Do they have to sell the Bitcoin, or can they take the Bitcoin out as a fee? And
I don't think they have to sell. I don't know. They're taking the Bitcoin, however they're doing it. I don't know. I haven't paid that close attention to that aspect of the documents. I can borderline guarantee you it says it in the documents exactly what they're going to do.
And in GBTC, they've left their fee at 1.5%, and they were 2%, but it was essentially 4% when the NAV was running negative.
Yeah, they haven't. Look, they lowered. I think they've said that they will lower more. It seems pretty clear the game for them should be to try to keep it as high as possible until they can't, right? I mean, that's how they make a lot of money. I mean, so I mean, obviously, if if half the fund flows out there, you can assume they'll lower it pretty quickly.
Yeah, I haven't talked to them specifically, but I can guess what their calculations are. Right, we have 7 or 8 ETFs that are offering fee waivers. Most of those 7 or 8 are down at 0% for something like 6 months. They don't want to compete with that. It's a race to the bottom, which is what I've said. Like the fees, they drive down costs. Like that's what ETFs do. It's cost compression. The end investor wins in those situations. But if you're Grayscale and you're used to getting 2% or how many $100 million a year, it's like, do I take the 90% cut and go down to 20 basis points even to be competitive with the lowest end? Or do I just drop 25% and go to 1.5 and then hope that less than like the corresponding amount of outflows they would take? Like basically they just need the number to not be 90%. So like they probably calculated and did some research. I'm sure I can guarantee you they did research trying to figure out how many people are going to keep their GBTC shares versus who's going to sell. And they probably calculated, we know we're going to see a bunch of outflows. It doesn't matter. We have the liquidity. We're liquidity king here. We have a ton of assets. We can afford to lose assets, and it's more profitable and better for their revenue to just cut to 1.5 and take the outflows than cut all the way down to 20 basis points or compete on a zero fee level than do that. Assets are easier to steal from. Like you can siphon assets by being a lower cost provider, by outperforming in some way, doing some unique situation. Stealing liquidity from an embedded ETF is extremely, extremely difficult. So what we see other ETFs do in this space, we've seen BlackRock do this, State Street and others, they'll leave their liquid ETF despite everyone coming in with ETFs that do roughly the same thing, but charge like a quarter or even less. And then instead of lowering the fee of their liquid one, they'll launch a new one that competes with the other one. So like if you're a trader or somebody who wants to get in and out, because the spreads are so tight on those super liquid ones, it's cheaper to trade in and out if you're going to do a short-term trade because the fee only matters over the long term for the most part. Who cares if it's 50 bips or 10 bips when you're going to be in there for a week and they're only taking like 1/365th out of it every time that you're there.
Yeah. So
that's the calculus. So my theory, I've said this on in other places. I think Grayscale, one, I think they might lower the fee still, which Alex hinted at, and I also think they might launch another ETF. They own the ticker BTC, so they could theoretically launch a cheaper comparable ETF
and
to
just
the ones
leave these ones in there. Leave GBTC alone.
See, I was surprised they even converted to an ETF.
There's
a solid argument why you wouldn't, because essentially they had a savings pot, a pension fund, that they were going to be able to take, what was it, 750 million at the current market rate in perpetuity, and the Bitcoin price continues to go up. I mean, essentially they just milk everyone till the end. It's like morally wrong, but
morally wrong. It's like so Jack Bogle created Vanguard. He's the one, part of the reason that ETFs are driving fees down, that Vanguard is driving a lot of this process. And he used to say, like, this is the same dilemma that active managers have in the equity and fixed income space, because ETFs and index investing came around and are driving fees down left and right. And a lot of these managers are basically either need to decide, are they going to try to compete here, which BlackRock and many others have done, or are they just going to sit on this melting ice cube that's printing money for them? And that's kind of what Grayscale need to decide. But the problem is, at that point, you're not a growing business. If you don't convert, no one's going to trust you again. No one's going to buy more of your stuff. Like they're basically de facto giving up on the business of Grayscale. And I never thought they were going to do that. So I debated people constantly about, they were like, they're never going to convert. They're going to do everything they can not to convert. And here we are. They converted.
Yeah. Obviously, and you've had Son and Shine on here.
In this room here.
It was a great episode, by far one of my favorites you've ever done.
Yeah.
And he's not wrong though. They've been calling to convert for years, right? Like I think they want to be a serious asset manager, so they had to.
If you're listening, Michael, I stand by the interview, but congratulations on
I think it's fair to say the industry owes Grayscale a lot on this fight. I mean, they in the end, it was absolutely their lawsuit that forced this, right? I mean, many other people also worked hard here, inside the issuers, outside in the regulators, wherever. But that victory in the DC circuit is the main reason that today happened, I would say, in the end.
Yeah, I think this is one of those situations where like multiple things can be true.
That's right.
Yeah,
That's right.
like at DCG and Genesis fucked a bunch of people, and Grayscale went and won a very important lawsuit.
Yep. I think no lies detected, as they say.
Yeah, Grayscale's the linchpin here in getting these things across the line. Like without that lawsuit, without them winning there, I don't think we'd get it. You saw it in the letters. There was letters that all these commissioners put out, including Gary Gensler. And
his letter was a very whiny, bitchy kind of. I just didn't understand it.
it's politics. It's all,
Well, of course,
it's all political.
He wants to
That's all
become
it is.
Treasury Secretary, right?
Yeah, it's all political.
Yeah.
But you got to. It was a 3-2 decision, the vote, and Gary was the deciding factor. You can thank Gary Gensler that we have a Bitcoin ETF. He is the reason
Okay, but
for multiple reasons, actually.
talk me through that.
The whole
Yeah,
my
because
theory.
why he voted it through? Because obviously he's conflicted because the suspicion is that he would like to stay very close to Elizabeth Warren and eventually get the Treasury Secretary job. Right? That's the.
It's an open secret at this point. Yes.
But he could have voted against it, and another lawsuit.
It would have been a nuclear option. The courts basically backed him, and it was basically him ignoring the DC Circuit Court of Appeals, which is a federal court. That said, I also think my theory is that look, Gensler has his political aspirations. I think he knew what he was doing. He gave a speech on August 3rd of 2021 that basically told every issuer what to do to get a Bitcoin futures ETF through the SEC. Without that speech, we probably wouldn't have gotten the Bitcoin futures ETFs that we got. And that was the first domino in the linchpin that led to us getting spot Bitcoin ETFs. So he's literally the one that opened the door for Bitcoin ETFs to happen. And he just closed the door after it happened with that commission vote. So he literally started it and ended it to get us a spot Bitcoin ETF, which love him or hate him, like he is the reason we got it.
Yeah, I think
from both ends.
And frankly, I think the two commissioners voting against it is also just purely political. They if it looks like it's not going to, the commission was at serious jeopardy, legally speaking.
Who was it? Crenshaw and
the other two Democrats.
Yeah.
Crenshaw. I don't remember the other person's name. It's Crenshaw. And then the two Republican commissioners are Hester Peirce and Ueda.
Ueda, yeah.
In fairness to Hester Peirce, she's been very consistent for years now.
More than in fairness. She's absolutely excellent.
Yeah,
she also appears to understand markets broadly a lot better than many other people that work in markets. So
I think she seems to understand American values.
Yeah.
Better than most people. I mean, look, I think her statement that came out was brilliant. I think every time she's dissented, I think I've read every dissent, and they've also been absolutely brilliant.
She's also she's a great writer too, which is you don't see that often in the finance world. No offense to anyone in finance. I guess you got Joe Weisenthal and Matt Levine over at Bloomberg that are great writers in my opinion.
I interviewed her at the SEC once.
Did you?
Yeah.
She's great. Yeah. But I think again, like it's existential for this. I mean, the SEC is going to get absolutely wrecked in court if they didn't do something here. And I bet you, I mean, there could have even been tussling, one of them's got to vote for it because it has to go through or the SEC's in serious legal jeopardy. Like truly, I mean, they're going to get absolutely smoked in the federal court if they don't.
Yeah.
So it's a matter of kind of who's going to do it. And of course, all three of them put out, I mean, Chair Gensler's statement, he started off saying that it was, that the SEC is neutral on assets, but by the way, I hate Bitcoin, right? I mean, he said a bunch of stuff about it. So, but it's this conundrum. The people who are professionally anti-Bitcoin, there's a fair amount of these people, right? They have this conundrum where they constantly talk about all the bad things you can do with Bitcoin, but they simultaneously say it has no use cases. Yeah. Have you seen this? It's awful. It makes no sense at all, right? It's completely useless. It's only for speculation, except everyone we don't like around the world uses it, and that makes it bad.
What do you think?
What?
Where do you think Gensler goes next? Does it all come down to the next election? Because I don't know what happens with the SEC if once the election's done for whatever, say the Republicans win, say it's a Republican president, does that immediately rotate out the chair of all these three-letter agencies?
Typically, that's how it works.
It does. Okay.
They would resign or be pushed. If a Republican wins, I'm fairly confident that Hester Peirce would be the chairwoman.
It's been deserved.
Yeah.
And she will reform the SEC in the way it needs to be reformed, I guess.
Yeah, that would be my base case.
Yeah.
This is getting out of my wheelhouse. I'm happy to talk about it, but I'm definitely not I'm not the expertise to be talking about this, but that is what I would expect to happen.
Yeah.
But you do have to remember, like Gensler, if Hillary Clinton had won the election, Gensler likely would have been Treasury Secretary.
Yeah, he was her like campaign finance director.
Yeah, he was lined up to be the Treasury Secretary. So that loss is why we're here where we are.
Because he's politicking.
Yeah, he wants to be. He has higher aspirations.
Well, he didn't have a great week.
Apparently Mike Novogratz, his boss was Gary Gensler at one point during his
heard
Goldman
this.
career.
Yeah.
In Asia or something when they were in.
Yeah.
So, and I had the ignominious distinction of having worked with Chair Gensler a decent amount when he was at MIT's Digital Currency Initiative, and I was head of blockchain research at Fidelity because Fidelity was a big donor to the DCI.
This is why I don't think Gensler hates Bitcoin. I think he understands Bitcoin. He likes Bitcoin, but he likes his own career more.
I'm with you 100% on that.
Yeah. I think it's all been career based. But he did have a good week. I mean, can we just take a moment to laugh about everything that happened this week?
I just can't believe
fucking hilarious.
The SEC tweet thing was just, I mean, I don't think I've this. Has anyone ever seen a financial markets regulator account be hacked and tweet market manipulation in any country? I don't think I've ever seen that.
In Crenshaw's letter, she acted like that was a reason. She wrote basically that was a reason to deny the Bitcoin ETF because of the community that did it.
Are they investigating?
No one knows who did it. All right, let's find out who did it first, Commissioner Crenshaw.
The FBI's on it, apparently. The FBI's doing it.
Good.
I mean, we need to find out.
I mean, you do have to laugh because I'm pretty sure some people have said, I think I heard you say maybe even that you'd probably make more money tweeting a rejection and then shorting if you're the hacker.
Yeah, a lot of people said that was wrong and I didn't understand how markets work. But in my mind,
that may or may not be wrong. I think it would have had more impact probably.
I do. Yeah, I mean, it was. But it might.
My point is, I think the hacker is if it's an external hacker, they're also just pro Bitcoin. They didn't. Well, maybe they could have, but they certainly didn't want to tweet a rejection.
Yeah,
right.
Is it 100% confirmed it was a hacker?
No, I think it's confirmed from X that the account was compromised by a new user, right? Someone that hadn't previously accessed it before.
There was some other weird. We really know. There was some other weird stuff too, because they tweeted stuff and deleted it, and then they were liking weird crypto-related posts.
I'm certain it was not like, oops, the social media manager at SEC accidentally hit publish on a tweet. I'm certain.
That was
by the
my
way, you
initial.
also did not see them tweet when they really did it. You wouldn't expect the SEC's formal handle to tweet that anyway, but I do think it was. We'll say unintentional. It was a compromise. Like somebody, whether it was insider threat or outsider threat. I'm just saying, you do know it's like, I'm saying the most famous hacker group of the last decade was called lulzsec. Okay, the hackers in general like to do things for the lulz. Okay, because you could have tweeted something like, we're opening a formal investigation against the largest company in the world. I mean, there's a lot of other market manipulation you could have done that was better than that if you wanted to.
Yeah, it wasn't.
But this was probably the funniest thing you could have done, though.
Do you think? I think you could have done a lot more funny things.
Yeah, maybe.
Yeah,
maybe.
I think you could have done a lot.
Well,
of funny
you could have done some things that are way more manipulative.
Yeah, you could have.
The problem was it just looked like the tweet you would expect. It looked like a mistimed tweet.
It was pretty good.
The memes that come out of the back. Did you see the thing that was it? Who was it? Was it F2 Paul?
What do they have? They had a good one.
Described in one of the blocks.
Oh yeah, Gensler on brink of second ETF approval or whatever. Yeah, I saw that.
Literally killed me.
Amazing.
Yeah, and I think Saylor tweeted out, "We're going to need 6 confirmations from Gensler."
That's good.
I literally died.
That's good.
But it was like a catalog of fuck ups.
Well, then you got to the actual approval, and so when
where the website went down or something.
Well, no, it wasn't even just that. So I think whoever the SEC didn't realize that these accounts on Twitter were getting the documents before they were posting on the public-facing site. So typically you go to the site, the SEC, SRO, whatever, and you can see a list of everything. But there's a bunch of accounts that have sniffers that are looking on the back end for any new URL created in the SEC domain and tagging it and pulling it immediately. So somebody probably thought, all right, we're going to load this and get ready to drop it.
In
after
30 minutes, we'll post it.
Yeah, exactly. And then it went everywhere. And it wasn't that the site went down. They literally took the document down from that link.
And then put it back up 30 minutes later, basically.
And then it went back up.
Yeah.
So they definitely took it down. So they didn't want it to go out when it did. So Bloomberg was like, are you sure this is real? I'm like, I'm looking at the document.
Yeah.
If somebody faked this document, they need
it's one of the top securities lawyers in the world if they fake this document.
It was an approval document. So I had to argue with people in Bloomberg. I was like, no, this is it. This is the approval. I promise. Not a head fake.
Did you read the document? Because somebody sent it to me. I was like 22 pages. I'm not reading this shit.
It's my job. So I read some of it and I skimmed a decent amount of it.
I read and skimmed as well. And
Yeah.
One thing that's really interesting that they did is that they had, and again, because of the Grayscale case, by the way, I think Fidelity had also made this case in 21 in filings for their ETF. Again, the question about whether futures prices are mathematically comparable, similar to spot prices. This is one of the main things that DC Circuit Court said was that, first of all, you don't need a surveillance sharing agreement with a spot market of sufficient size, which was one of the things they've been denying for. Futures are enough. You can surveil the futures markets, which, by the way, is what all commodity ETFs do. There is no centralized market for corn, guys, or gold, right? Where do you think the trading floor for gold is? It's literally all over the world at all the time. Oil, same thing, right?
Yeah.
So you surveil the futures, and in the 19B4 approval that they posted yesterday, they go actually in depth and say, like, we previously rejected it for this reason, but actually that the court vacated that. And when we look at the other reason, they did their own math and they said it actually is true that surveilling the futures is sufficient to catch manipulation. And so they have a whole analysis there. They did their own math too.
Yeah, they looked at everyone else's math and were like, okay, we agree.
We'll put this math in here.
But but in the oral arguments, they were arguing like they were basically trying to confirm a negative that you couldn't truly confirm, but like everything pointed to like, that you can surveil using the futures markets. So then iShares comes in with that surveillance sharing with Coinbase, and they come out and they basically say, we requested this, but the surveillance, whatever, blah, 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 what Alex said, and then was like, and Coinbase is not a market of significant size. So that was one thing that I learned. Coinbase, as far as the SEC is concerned, is not a market of significant size.
But they said, it's okay because that whole argument was negated anyway, and we'll go back to using the futures anyway.
Which is what, that was what I was arguing anyway.
Yeah.
The Grayscale court case basically made it so that the Coinbase surveillance sharing agreement did not matter.
Yeah.
I mean, look, how long have you been covering ETFs now?
10 years.
You're the ETF guy, right? Yeah. Maybe that should be your...
It'll be 10 years in June.
Well, like I said to you, through this whole thing, you've been the signal for me. Like lots of people discussing ETFs. I'm like, I always go to James. I'm like, go to James's account. What's James said? All right, that's to me, that was truth. In a world, it's a bit like during the block size wars, Adam Back. What's Adam's Back's view on this? That's my truth. You are my truth in this. But like, has there been anything like this in the history of ETFs? Or is this completely unique?
This is a one of ones. Nothing like this ever. I mean... It's not even just in the ETF world. Like you had politics involved. You had like literally the highest rung of government like involved. Like Elizabeth Warren's involved. We know for a fact like the Biden admin knew kind of what was going on with this thing. Then you have BlackRock and Fidelity and Invesco and massive asset managers, billions of dollars at stake. You had retail investors unarguably being hurt by the SEC not doing this, and the fact that they had to use GBTC, which was trading at such a broken discount or premium before that. They were forcing them into products like that rolled futures contracts. Like it just looked so bad from all levels, and the SEC like. I think I said this last time I was on your show. They completely lost the forest for the trees. Like if they're protecting investors, just do this. Like trust the ETF wrapper, trust these market makers we were talking about to get this done. But no, there has never been a frenzy like this. It's been fun to be kind of at the center of it a little bit.
Oh, James, but also, you've been the center for sure on this, leading into it in particular, right?
I was saying last night when we were having a beer.
This is the account to follow on Twitter.
James, you peaked now. What's now?
Even Balchunas, I get upset. This guy has to tweet stuff about other ETFs still sometimes, and I'm like, dude, what is this? I have you on alerts, Eric. It's not about Bitcoin. Like, I might have to take you off alerts.
You wait until you have to cover the Ripple ETF when that comes.
Oh yeah,
you had fun. Now you're gonna have hate. Just the fact that you're tweeting about it is part of your job. They'll still hate you.
Yeah. Oh, believe me, I say one or two things about it, and I get bombarded by the XRP army. It happens. I'm well aware, but. Yeah, no, I've been lucky enough to be right on like most of the things I said. I got some stuff wrong here and there, but for the most part, we've been lucky enough to be right on all of our calls. So
somebody was saying, remember the days when we were auto refreshing on the DC Circuit Court of Appeals website? Those were good days. I was doing that. Then after that, I had a good moment there. I found it first. I think I found it first. I think if you go back and look at the tweets, but then I was like, I can't play this game. James and Eric have it. Like I can't go any further on this one. I was like an auto refresher on my Chrome. Looking at a core website that I can do. Beyond that, I got to let Eric.
Yeah, we had web crawlers set up on there too. So we have like all these crawlers set up on everything. I'm not smart enough to do that, but we have people at Bloomberg that like specialize in that stuff. So, but yeah, I remember when people were telling me that I was insane for saying Grayscale had a shot at winning. Like we in January put in a note that said Grayscale had a 40% chance at victory, and I got eviscerated by people telling me that Grayscale was filing a frivolous lawsuit.
Because you guys have that great guy Elliot Stein too, a great legal analyst in the finance world too, and he same thing. People thought it was no chance, and then it came out as like cascading avalanche victory.
Yeah.
It wasn't only a chance. They absolutely annihilated the SEC in that case.
Yeah, I was arguing with a lot of people that were trying to do the redeem GBTC stuff. I was like, I think they're going to win this case. I wasn't against the whole redeem GBTC movement, but I was like, I don't think it's going to matter. Like, it's going to become an ETF. Like, they're going to win this lawsuit and they're going to get to become an ETF. And then the argument became is like, they're going to act like they want to convert it, but they don't want to. Like the thing you were talking about before, why not just sit on this basic annuity that's just going to keep printing money that right now is closed to new investors? But at the end of the day, they would have lost other lawsuits to the likes of Furtree, who's the guy who was in charge of that lawsuit was at PubKey last night, by the way.
Really?
Yeah, the guy from Furtree.
So do you think this helps them with their other lawsuits?
The lawsuits for the most part, they don't matter anymore. It's an ETF. Right. They've done right by their investors, and anyone who is like trying to sue them and get their money back at par
can get their money.
There you go. Today you got your money back at par for the most part. I think it was trading at a little bit of a discount, tiny bit, but like for the most part, you're even. You've got your money.
Or wait a day or two more, and the market makers will sort it out. Yeah.
I mean, look, we all exist in multiple Twitters. I have Bitcoin Twitter and non-league football Twitter. This is just a reality of my world.
I've got my scarf in my backpack.
My man, is there an ETF Twitter?
Yeah, there is. It's we call it FinTwit.
Okay. Well, okay. So FinTwit, that like world that doesn't know about Bitcoin, what do they make of? Are they like, what the fuck is this insanity?
No, the people. So there's FinTwit and there's a subset that focuses predominantly on ETFs. But for the most part, everyone in FinTwit knows what ETFs are. It's a lot of advisors and people like that.
No, but particularly the Bitcoin ETF is like,
they know it. Yeah, it's been 10 years. Like they've been following it too. So like you've been, but the funny part is like I sit between these two worlds. So like I see a lot of horrible takes about like finance or traditional finance from crypto and Bitcoin specific people.
Yeah.
And then I also see awful, horrible takes, even more so from TradFi that just don't understand how Bitcoin works or what Bitcoin is, or crypto for the larger purposes. But like,
are you the bridge?
No, the thing is, I'm not like the
I don't
one
think
thing
he's a bridge. He's the guy saying both people are wrong. Right?
Yeah,
like
I'm the expert in ETFs, and I'm not going to pretend like I'm a traditional finance expert. I'm not a portfolio manager or anything like that. But like, I'm like, I like to say like I know enough about Python to like sit between a programmer and like Balchunas, for example, and explain like what we're trying to do in layman's terms. That's kind of how I feel between these two things. Like I'm not truly an expert. Like I know how Bitcoin works. I understand consensus and all that stuff, but I would never sit here and debate with like Adam Back or pretend to know more about how this works or what the downstream effects are going to be. But when it comes to the ETF and like how these things work and bridging those two things, I feel like I do a better job than a lot of people. There's a lot of us out there. There's more of us out there than that. Like I would consider Alex to be there, but like there's a lot of people that like just they think they know how things work and they try to pontificate, and it's just like that is not how this works. Essentially,
but you've become the guy.
Thank you.
He's got a good niche. No, he is the guy.
You've become the guy.
I agree.
You've owned that entire thing.
Well, it was funny.
Start a podcast.
He's gonna. Wait till the ETH ETF really starts to heat up.
I know you don't care, but I will be covering that too.
So I think it's going to be a big deal.
He doesn't care.
No. I don't care in terms of this podcast. I care in terms of shits and giggles.
I think it's super. No,
it's going to be hilarious.
I mean, I care in general, but I also I like process stuff. I like court cases. I mean, I worked in the legal profession for 8 years at Fidelity before I switched to.
Really?
Yeah. So I was a forensic investigator in Fidelity Legal. So but I'm saying I like all this annoying stuff. Yeah. I love nerding out on this regulatory. I love regulatory.
I like
I'm obsessed with it. You like popcorn?
I like popcorn. Yeah. I'm more excited about the Ripple one. Just it's just going to be so funny.
All right.
What about Doge? Wait. Can we go after ETH? What is the next one in your mind? If we just have to guess.
Ripple.
You think we'll get Ripple before we get Doge?
I think Ripple are going to be full steam ahead. XRP Army 589. Is it 589?
I mean, they have that ruling that currently is, I don't know, I would say like 65% supportive of Ripple.
So Ethereum, the first deadlines are for Van Eck and ARK. They're due May 23rd, May 24th, which is equivalent to what we just saw with ARK and 21 shares who were due on Jan 10. So those are the first deadlines. No guarantee it happens then. I think it happens in 2024. ETH is probably going to happen. We're at like 70% odds. We haven't published it yet, but we're over 50% is what I can confidently say.
More likely than not.
Yeah, more likely than not.
So you're saying I should cycle all my Bitcoin into ETH now?
No comment.
I'm going to say don't do that.
Yeah, maybe not.
Yeah, I'm never doing that.
What if I said yes? Would you have done it?
No.
Yeah, so it doesn't matter. Well, you'll be happy to hear my next take, which is I don't think anything else is happening anytime remotely soon.
Oh, so, you don't think the Ripple one happens?
I think the Ripple one It could potentially be the third, but I don't think it's happening anytime. We need all the stuff in the Ripple court case to be done. There's no way the SEC, they're going to have grounds to not allow this. The other part is, even if they do win and it's de facto agreed to be not a security, let's assume that. I don't think that's necessarily going to be the case. They still probably can't get an ETF because there's no regulated futures market. So like the current process to get an ETF in the US, a spot ETF, based on taking the steps from the Bitcoin ETF, is you get a futures market, CME Bitcoin futures. And then there's a few other things that happen on CME, micro futures, options, what have you. And then you get a futures ETF, and then you can get a spot product. So if we follow that same theory, ETH is up next.
They also kind of go through a Canadian
else
ETF
is even
too.
Close. What was that?
It's like CME futures, then and the other CME products around it. Then it's a Canadian spot ETF.
Canada's
and then
always
it's
ahead
the
of
US cash settled futures ETF.
Why does it need a futures first? Why?
Because of that whole regulated market we talked about. The SEC needs to see a surveillable market for them to feel comfortable with this. And the way they fell back on approving these spot Bitcoin ETFs is they felt comfortable that the CME surveillance sharing agreement with New York Stock Exchange, NASDAQ, the SEC, what have you, is enough for them to surveil the market. So without any sort of market that the SEC can surveil, there's no ETFs that are going to be happening. So there's been a lot of takes like, oh, this is next, this is next. The only thing possibly next is ETH. And then you don't have to worry about any other shit coins getting an ETF in the US anytime soon.
And I mean, Bitcoin, Ether, and XRP are all meaningfully different. Right? I mean, the SEC hasn't been looking at even ETH. I think that to me, this is one of the reasons why it may not happen. Although I think, again, following the path, the path is laid out for Ether to have an ETF. But it's meaningfully different, whole different type of consensus now, right? They haven't been spending 10 years learning about ETH, right? I mean, they know about it. They're not, they know plenty about it, but I just mean, it just is different. It's not the same thing. Custody works differently. For example, there's no multi-sig native to ETH, right? You have to use a smart contract. Are they going to have to? What is the disclosure section of the ETH S1 is going to say about the Gnosis safe contract, which is what everyone uses for? It literally just is different.
Yeah, the SEC got really in the weeds here, right? Like everyone likes to say the SEC doesn't understand anything. The people working there understand this stuff way better than you think they do. If you think they don't know what they're talking about, that's all. That's the one thing I'll say. The other part is, I laid out that there's another path to potential other ETFs, and it's like a little act of Congress. Like if Congress gets its shit together and figures out to like lay out what all of this means, there's a chance we get a stablecoin bill. But like anything else coming through, doesn't seem like it's happening anytime soon. And then change of administration. Maybe a Republican comes in after the new election. That could speed things along. But for the most part, still, it's Ethereum and then nothing else. And then if we do get Ethereum, like Alex was talking about, people are like asking about staking. There's almost no shot. If the SEC allows this year, I would be absolutely stunned if they allow any sort of staking or yield farming within the ETF.
Which would make it strictly worse than holding spot.
Exactly.
I feel like we've said the word Ethereum a little bit too much for what Bitcoin did show, but this is the ETF man you've got here. So
listen, we will cover these things if it's relevant and if there's a chance to get out some popcorn.
Well, okay, one more reason why it is relevant, and one thing I've been saying about what the Bitcoin ETFs will do, I think long-term volatility in Bitcoin spot will dampen because of the ETF, because a huge amount of it's going to sit in advisor accounts. They don't trade every day, right? In fact, if anybody has a financial advisor, they probably only trade once or twice a year and rebalance and slight shifts of strategy. So more Bitcoin will sit effectively in stronger hands, right? By definition. But also, there's this many cycle story of Bitcoin leading the way to a new all-time high, then sort of going flat or sideways or even down, then Ether having a new all-time high, then going flat or sideways or down, then alt season, as the degens call it, happening, where a bunch of like shit coins go moon crazy hard. That's happened repeatedly in crypto. It even happened this fall briefly, when after the first like real jubilance on the Bitcoin ETF story happened in late October, then Bitcoin kind of went sideways, and then you saw, remember, it even culminated with like dog money on every single blockchain mooning, right? Every blockchain had its own like dog money that ripped. So that mini cycle, but this ETF is likely to also dampen that inter-crypto cyclicality, because again, the Bitcoin is not sitting on a crypto exchange ready to be quickly sold for ETH or sold for Dogecoin, right? So it's because it's sitting in. The one thing that could make it persist a little bit is if there's Ether ETFs too, then it might just be like a Bitcoin ETH story for that cyclicality, and everything else is just, I mean, you can imagine both. Bitcoin is going to be, it's already the most liquid of the cryptos generally. It's going to be orders of magnitude more liquid. And if ETH gets there too, then it's just the entire market is going to be a Bitcoin ETH market, like from a
Two-horse
pure
race.
Yeah.
Yeah. The other thing I would say that echoes what he says, I think these ETFs are going to dampen the volatility of Bitcoin because
That's what we want, really.
Yeah, because most people that are going to be buying these things, advisors or institutions, or if they put them in model portfolios, a model portfolio is like you're an advisor. You don't want to be actually managing money. Many advisors don't do much with managing money. They're out on the golf course. They're salesmen. They're boozing with their clients. They'll outsource the actual managing of money. And oftentimes they'll do like financial planning, like help you like how to plan things out. And they outsource it to a model portfolio. And the model portfolio is like, what is the risk tolerance? What is their risk appetite? All these other things. And they build a portfolio of equities and bonds, what have you. And they just use a bunch of ETFs for that. So it'll be like 10 ETFs in different proportions. So it's possible at some point down the line, it's not going to be initially. BlackRock is one of the largest model portfolio providers out there. They put their ETF in there. There's plenty of other model portfolios out there that have relationships with different people. So you could see something like Invesco's go in there, you name it. So but the main point here is even if it's not the model portfolios, even if it's just an advisor, what they do is they have target allocations. So they're going to put, I'm going to put 2% in or 5%. And the math behind what that does to a portfolio, it actually decreases volatility of the portfolio, increases returns. So you get like an increase in what's called the risk adjusted return or Sharpe ratio. So it's really good. But what that means is they're going to have a target allocation number, right? 2% or 5%. So Bitcoin goes up 80%. They're selling it as it goes up, right? So they're providing the other side of that trade. And if it tanks 80%, they're going to be buying it to get it back to whatever their allocation is. So they're going to try to keep that allocation at 5%. And they rebalance quarterly, semi-annually, whatever it is. So they're going to be like the other side of this. They're going to dampen the momentum potentially because they're not degen crypto traders or only buying what have you. So,
but this will make Bitcoin more useful and usable.
Yeah. Less volatile, more liquidity in general, improves Bitcoin.
It's a bit like, so when I don't have a pension anymore. Well, I have a Bitcoin pension. But when I did have a pension pre-divorce, they asked me those questions. It's like, it was like 3 major questions. What type of investment are you interested in? Do you want more higher risk? More higher risk, like that kind of thing.
Yeah.
So if you're more like high risk, what percentage of the portfolio might they attribute to this? Like what's the high end?
So like the way I think about portfolios now is like we call it core satellite, or we say like a core and hot sauce. So like core is like you're going to do 60-40 type portfolio or maybe 80-20 depending on how young you are, maybe even more. And that's just equities and bonds, and you're going to might just hold the S&P 500 for the most part. And then, but like a lot of people like to have this satellite approach, or we call it hot sauce. That's where I consider Bitcoin to be. It's like an alternative. It's also like fun to play with and trade around if that's what you want to do. And a lot of people will use that to invest in like thematic ETFs, like based on like artificial intelligence or solar energy or anything like that. And that's one area where ETFs can shine, because rather than buying a single stock or something, you're getting a more diversified exposure and you're still able to bet on something happening, but that's not in the core part of your portfolio. It's these ETFs, if they if advisors are putting them in, they're going to be in that 2 to 5% range. Right. Honestly, Alex can talk about it more. His report trying to figure out how many billions are going to go into ETFs was pretty damn good from a bottoms up perspective. And he looked at like where they're going to do. And I think that 2-3% range is where it'll average out, because no one's going to do just 1%. There'll be some people that do way more.
What was your conservative number again?
14 billion inflows in year one. Yeah. So net new assets brought into Bitcoin. I don't know if it's conservative, or I really still haven't decided. We have to wait until today, tomorrow, the first week, the first month to get an idea if we're on track, or we could be. I mean, Standard Chartered supposedly put out a note. I didn't see the note, but I saw the screenshot on Twitter. Supposedly 50 to 100 billion in inflows is what they were calling for year one. That seems very high to me.
Absurd to me personally.
Yeah. But the other point to build on what James was saying too is about the hot sauce. I like this. I haven't heard this. I'm gonna start using this because this is actually how I've thought about it. I got a core portfolio, and then I love commodities, right? Because I study geopolitics, and so I sort of feel like I have not an edge. I'm certainly not an edge over the pro traders in it, but it's something I actually know. Whereas I was never an equity analyst, so me picking individual stocks is not something I'm into. But I like trading commodities, and so I have some stuff in that bucket. And I think about this is a way that financial advisors also now increasingly differentiate, because if everyone's basically buying the same versions of the same portfolios, and they really are, I mean, it's absolutely a giant portion of the market. Fidelity, you can even do this automated now. All the robo advisors, which now people aren't even really using anymore, but like they were doing this exact thing like automatically for you without even a person.
Betterment has added crypto investments on their platform. They're a big robo advisor.
But
in the US.
This is a nice way if you're a financial advisor for regular people. I mean, I'm saying not at a hedge fund, not an endowment or whatever with specific things you have to do. If you're managing people's retirement and their family personal wealth, if everybody's basically about the same stuff, well, one thing you can do is say, well, actually, we have a guy here who was 20 years in the real estate business, so we actually are really good at like throwing in a little bit of some real estate investing, or we're really good at tech, or we're really good, right? And they do a little bit there. And I think that Bitcoin ETFs will be something that fits and helps to differentiate, because first of all, they get to go out with this like new story, right? And you don't get a new story very often in investing.
So you got a new thing to sell.
Exactly. But also you get to differentiate yourself. Like, I mean, you see Vanguard supposedly today saying they're never going to add them, right? And I've talked about this too. There are wealth platforms, BD, that are with broker dealers that, for example, don't let you buy cannabis stocks. I don't know why. They just don't like them. Right?
But it wasn't just them. Wasn't it Merrill as well?
Well, yeah.
That's a different platform.
And that's a different problem. Vanguard's basically saying, supposedly, there's a quote, right? They're actually saying they won't add them. Yeah. The others merely haven't yet added them. Let me say that. Yeah.
So do you think Vanguard will eventually flip on that?
So I do not.
Okay.
But you got to realize Vanguard's a little bit different than some of the platforms that I saw people throwing out there.
Yeah.
There's like wirehouses. So like Vanguard is a self-directed brokerage account that you can't buy these things on, which is that it's against their DNA to allow you to trade crypto. They don't even you can't do really gold. They allow gold ETFs though, but for now they're not allowing Bitcoin ETFs. We'll see what happens. They stopped allowing you to buy GBTC not that long ago.
I think you can only sell.
Yeah, you could only sll because they said it was based because they didn't want OTC trading things, but it probably had to do with GBTC. But these other platforms, it's where those advisors we were talking about, or those brokers, they have like these lists of like, these are the green light. You can buy this whenever you want for your clients. And then there's usually a separate list or maybe multiple things in the middle with different levels of hurdles before you can buy it. So like you need to write up and explain to compliance or these due diligence people why you want to buy this product for your end clients. And then there's some that are like in the red zone where like, no one can buy this, not until we do our due diligence. And that process could take months to years before those big platforms allow these advisors and brokers to buy it. I know for a fact some of these issuers are out there trying to talk to these platforms about why they should allow the Bitcoin ETFs to be sold, but it's going to take time. So that's why I think like everyone's focused on like how much money is going to come in on day one or day two.
This is a marathon, right?
I'm way more interested in what happens 18 months from now, because if you get this on these platforms, the Raymond James of the world, the Merrills, where the big money is, that's where it'll be important to see, like if they start buying ETFs.
So we're very early on this.
This was our entire point in our report, which we did an episode on, so I won't redo the whole thing, but it was that like, dude, we all can buy Bitcoin right now, right? I personally, I throw it out there. I know we're all friends. I like buying Bitcoin on River. It's very easy. You can buy it on Cash App, buy it on any of the crypto exchanges. You can buy it in your Fidelity brokerage account already or adjacent to it. Right. So not hard for retail to buy Bitcoin. No issues with it at all. In fact, we've all been buying it for years for the most part. If you're lucky, or if you were early, right, you've been buying it plenty of places. Coinbase. I'm not going to hate on Coinbase. They've been selling Bitcoin to retail Americans for over a decade, basically. Right. So,
is this all about portfolio construction? Yeah.
Well, it's just that the group that can't easily buy it are these wealth managers on these platforms, and primarily on the platforms, but also even independent ones didn't have a great way to do it. That's who these are for. That's who. Look, this would be for everyone. This is what's interesting about the gold comparison for like the gold ETF, because you really couldn't buy investment grade gold easily, right? There was no, I mean, some of the brokerages will let you, they have a metals desk. You might be able to buy it like at Fidelity or at GS or something like that. It's possible, but not easy. Definitely not like everyone can download an app from the App Store and buy gold. There was no way to buy gold.
Yeah, you have to go to the pawn those coins or go to the pawn shop.
Yeah, Eagles. You have to go get some American Eagles, and literally you have to go to the store to buy gold.
And put it in your backyard.
So that was an ETF. It was a retail explosion because now everyone could buy gold, but everyone can already buy Bitcoin except for this large but like specific cohort that has a lot of trouble. And that's that, and they don't turn on day one. That's why I'm saying even whatever this volume day comes out to be on day one, it looks like it's going to be pretty gangbusters. We're nearing 4 billion. I saw we're not quite there, but 2 more hours left to trade.
Would this be some kind of record?
What is James Eric he tweeted about it or something.
I mean, this is meaningfully high, yeah.
Yeah, the problem is it's hard. Like I was saying in the beginning, it's kind of hard because you're used to looking at just one ETF. So I'm going to look at everything down and try to figure out like where each one of these fall. But like GBTC is at 1.8 billion today, which is a huge day, but GBTC was a very liquid $30 billion product. And I think most of that volume is outflows. Yeah. So a lot of money's coming out of GBTC, likely pouring into these ETFs. Based on the price performance, it might be net outflows to Bitcoin in general, but who actually knows? But it's hard to figure all this out.
Well, then you have some like, I don't want to name any specific issuers, but like, let's say some that run active ETFs and they now have their own Bitcoin ETF, right? They may also just be rotating like where they're getting their exposure from. Like this is like where I'm not even remotely close to knowing how to even really where to start here. But you guys call it BYOA flows, right? Like bring your own assets. Like that's the other thing is also figuring out who, right? We heard rumors of like different issuers like lining up a bunch of money to come in early. Like first of all, I don't think we've seen that. So I think that was not true. Or at least the specific rumor I don't want to mention, but like, cause I didn't think it was true then anyway, but does that count? Is it organic or is it like some kind of structural thing?
So we often,
it's hard to know.
Yeah. We often discount like BYOA flows for these type of record breaking. That's why I was hesitant because like you can look at some of these and there are ESG ETFs that focus on like carbon and like carbon neutral stuff and Paris aligned equity investing. And then like a Finnish pension fund puts $2.1 billion into it in day one. That's currently the record right now, but that's not really like, that's not organic demand. So we're going to try tonight and tomorrow, we're going to try to suss out like what the organic demand looks like. And it's like, it's more an art than a science. Like I said, I'm guessing GBTC, we're going to see a lot of outflows. We're probably going to see significant inflows. The inflows that I heard about happening on day one, that I don't think they're there. I think a lot of the flows, it'll be curious to see the net flows, but also it's day one. Like a lot of this money, even if they had money lined up, maybe it's not happening on day one. It could happen day two or into next week.
Right. And that's what I mean. These things are really designed for the advisors. I mean, look, ETFs are for everybody. We've talked about this, but given the weird nature of Bitcoin and the Bitcoin markets, like, and they're just going to take it. Even the ones who are supportive, like they're in compliance review and you want to add something to that list that the advisors can use, a bunch of people have to sign off on it, right? Even if they like it, some of the advisor platforms, they already offer private Bitcoin vehicles. We know this, right? And Galaxy is one of the providers of those vehicles, and we're on some platform. You assume that those turn on the ETF, but they haven't yet. Right?
It's not going to happen.
They don't do it like day one. Yeah. So that's why for this, I think strangely, it's really not about day one flows. It's some longer time frame in the end.
Is in some ways day two more important than day one? Like day one's a shakeout?
I would say like I'm more interested in seeing what happens in the coming weeks.
Okay.
Yeah. Like really long term, like months even, because some of these funds are probably going to have to close. But we talked about BYOA. A lot of these guys, from what I understand, have a lot of BYOA ready on the sidelines that will come in over the next week or two.
Yeah.
So we'll see exactly how that shakes out. There's been a lot of rumors about billions of dollars flowing in. I don't see any single ETF trading with more than $1 billion yet today. We still have just under a couple hours left of trading. So there's no way that many billions of dollars flowed in today. I don't think.
Right.
So the only one trading over $1 billion are GBTC, and they're probably going to hit 2 today.
Right. Okay. Longer term, what else are you looking at? Is there anything else we should be keeping an eye on?
In the ETF world? No, I'm just laughing because like, this is a big thing to watch. You got to watch more than just this.
Yeah. What? This probably more for you as a Bitcoiner, Alex.
Well, let me tell you, because I wanted to talk to you. This is shifting gears a little bit, but I think James raised the politics around Bitcoin, which also make it also add both to the humor and the seriousness of the ETF whole thing. I mean, because gosh, it's not all the stuff that you said, all the backs and forths and the different characters and then the hacks and it's also the fact that the underlying is a revolutionary thing, right?
That was going to be my question.
And it's a dangerous and revolutionary thing. And I mean that in a positive way, right? I mean, change is dangerous there's no such thing as a revolution where someone doesn't experience change negatively, right? And of course, Bitcoin is designed to, at a minimum, protect your wealth from deflation, I think, which is at the core, right? Chancellor on the brink of second bailout for banks, but also potentially changes how money works in general. Like unstoppable payments is a real thing. So it's highly political in the scheme of thing. And I mean, like, I don't know, either like lowercase political. I don't mean like Republicans and Democrats. I mean, like it dramatically impacts power in the world. And in many ways, it's empowering for individuals in a way that hasn't previously existed. So there's a lot of people who don't like it. One of them is Senator Elizabeth Warren. And there's this bill that I've been harping on, I think we were going to talk about this a little bit. I'll just give the quick pitch called the Digital Asset Anti-Money Laundering Act. DAML, DAAML, is what it's called, and it's co-sponsored with a Republican. And she has been out here. We've been stacking sats. She's been stacking votes basically, and they've got a lot of support in the Senate for this. Now, luckily, not enough support yet. But
and do the ETFs help us?
That's a really good question. I'm not sure. I think probably yes. Probably yes. If the ETF issuers tell the story well, this is another thing I want to call for on all issuers is to, and we've seen some great stuff from Van Eck, from Invesco Galaxy, I thought, from not yet from BlackRock, but I hope they put out some, but Larry Fink has been quite positive. I think his commentary on Bitcoin has been spot on in the scheme of things. We want to see the issuers, of course, promote the underlying true value of Bitcoin, which is not that it sits inert in a brokerage account, right? It's much bigger than that. And so, for example, the issuers need to be opposed to DAML. Now, DAML would make it basically effectively illegal to operate a Bitcoin node or a Bitcoin mining machine or publish software that allows people to store their own keys. Yeah. And you might say cynically that issuers should theoretically be fine with that. Great, let's kill self-custody and give us all the coins, right? That theoretically is their incentive. But of course, if that happens, the value of Bitcoin in dollar terms and usability will go to zero or very low, right? If you can't run Bitcoin, if you can't self-custody keys, then why even bother having Bitcoin? Why don't we just give Invesco and BlackRock a spreadsheet and let them tell us how many coins there are, right?
Exactly.
So it's existential, and this bill is particularly bad. It says that it wants to stop terrorists from using Bitcoin, but actually the people that it stops are regular Americans, right?
Yeah, and listen, look, it's hyperbolic, but it's really hyperbolic what I'm going to say now, but it feels like it's taken us in this journey that's kind of going to restore or rebuild traditional American values of what the Republic was built on.
Yeah.
Because it's been lost to the greedy power brokers, to this political class, where it's become so apparent that the elites within DC are getting rich and massively increasing surveillance, and really have drifted so far from the original American dream and the promise of the Republic. We're so far from that now, and Elizabeth Warren wants to continue that.
I mean, she is.
This could reduce power.
Yeah, I mean, I think. Well, we know. By the way, I should have added here: the banks wrote that bill for them, right?
Yeah,
that's the best part.
The co-sponsor, the primary co-sponsor, literally said that. But also, we know.
Did you see that clip?
Yes,
amazing.
And he said it was the American Bank Association. I believe it's actually called the American Bankers Association. But so he doesn't even know who wrote it exactly. I put the blame much more on the Bank Policy Institute, which is a much more elite cabal of the banks, right? It's actually chaired by Jamie Dimon is the chair of the Bank Policy Institute, right? So, and by the way, JPM has other business before the Senate Banking Committee, specifically around Basel and net capital requirement rules, which are changing. So perhaps there's a reason why, and of course we know that maybe not anytime soon, maybe it never will. But I mean, again, Chancellor on brink of second bailout for banks, what do we say? Be your own bank. Well, wait a second. JPM's the world's largest bank. They probably don't want everyone to be their own bank. They prefer if you banked with them.
Of course.
So it's obviously directly competitive with them. So it just kind of starts to, now not every bank, by the way, I don't want to hate on the banks. There are plenty of banks that like Bitcoin a lot. BNY Mellon, the oldest bank in America, founded by Alexander Hamilton himself, they love Bitcoin.
Did he?
Yeah.
I never knew that.
Bank of New York.
BNY is the one they're doing the most fighting on SAB 121 that doesn't let,
because they want to hold Bitcoin. They want
to custody Bitcoin.
Yeah.
Yeah.
So anyway, I'm issuing that clearing call now. Look, it seems like right now the very immediate thing, this bill is not going to move today. I was worried it would be attached to the must-pass spending stuff that's happening right now in Congress. Seems like they've come up with a what we call a minibus stopgap funding bill that's going to basically kick the can again for another X number of months. Usually nothing gets hung on that because that's truly must pass, but this will rear its head again. And it can't just be Bitcoiners like me and James calling for this, or Pete and Danny. It needs to, now we need you want to, yeah, we need Larry, we need Abby, we need Invesco. This is, you're in the game now. This thing isn't valuable if it's not able to be used in a self-custody manner.
But the thing is, if this...
That's the innovation. That's the core innovation.
If this is suddenly in the portfolio of every boomer and every pension fund...
That's what I'm saying. We and the issuers, we got to take the story of Bitcoin's true value out. That's how they're going to do it. It's how they're marketing it. It's not just portfolio returns, although that's a part of it. we got to tell that story widely. I really hope and believe, and we're working at Galaxy to make sure that any discussion we do about Bitcoin is geared to these net new groups and includes the actual truth about what makes Bitcoin valuable.
Isn't it wild though, when you really think about it? In 15 years, it's gone just from a white paper.
It is actually wild.
Yeah, a white paper for like an idea some anonymous guy had for a form of digital money, and then like
I know, he's probably,
then how it helps him mine it, and like it spreads, and like even when you first get into it, I've spent most of my time in Bitcoin saying, well, at some point they're going to ban this. At some point.
Or like you watch the video where there's that video that's been going around. A guy filmed himself watching Bitcoin break $100. Did you see that recently?
Yeah.
And it's like, dude, that it was like random, even for the internet, niche people. That thing that's $100 is now being marketed by the world's biggest asset managers.
Yeah.
It actually worked.
No, it doesn't.
Like get that through your head.
Yeah.
I can't believe it actually worked. I mean, I can believe it. That's why I guess the question is, how early did everyone figure out? How early you realized that it would work is how wealthy you are today, basically, right? In Bitcoin terms. So, but I just can't believe. I'm still shocked. I'm just. It's gonna get bigger.
Yeah,
it's gonna get a lot bigger. That's what's crazy.
So the interesting thing is now I do think it's kind of unstoppable. Like it was always unstoppable as a blockchain. Always someone could mine another block, whatever, right? But like I always felt like they would stop it, or they would regulate the fuck out of it. Now I'm looking to Europe and thinking, it's very hard to buy Bitcoin in the UK. Most banks won't let you do it. We've got now accredited investor rules.
I saw this. They make you take like a test.
Yeah, it wasn't just what is your net worth. They were asking you specific questions about Bitcoin and crypto assets.
Like you answer that wrong, then they don't let you buy.
No, then you're done. Then you're out, right? They've made it so difficult, and it's just like all you're doing is making us more less and less competitive than the US. It's like, come on, you got to flip this at some point.
It's just
it felt like we were being left behind by Europe because Europe has had Bitcoin ETFs since like 2015. They had ETNs trading in Sweden.
There's something weird though. They're not nearly as good, right? European ETFs aren't like a bankruptcy remote or something. There's one aspect to it. So like, they've never been as big as American ETFs.
They're also they're kind of harder to get because they're not UCITS compliant, which makes them harder to buy. Kind of similar to what you were talking about. But the other thing I did want to point out, you were talking about JP Morgan and bankers. Like they're an authorized participant on a bunch of these ETFs,
including ours,
including yours, which is hilarious. And you know that I have to assume whoever's running that desk, they are one of the biggest authorized participants, which are the people that like facilitate the actual creation and redemption of shares.
They have to be like, okay, we know the top of the house doesn't like it, but like, I mean, this is our business. Well, also there's hundreds of people there working on Onyx, which is their blockchain thing. And I've always been friends with Christine Moy, who used to run that. She's at Apollo now. She's great. And like, so, I mean, there's plenty of people there. I think JPM is a huge investor in Consensus, actually. Like there's tons of overlap. It's just absurd.
It's just absurd that he's at the top and telling them they should kill.
But you also, it's not a credible policy statement, right? It's theater when he says that. Yeah. Oh, if I was president, what did he say? I would kill it? Or,
he'd kill it.
That's not something
it was rehearsed.
No one's asking. I'm sorry, no one's asking you that.
Every time.
So like
every time Elizabeth Warren asks a question of those situations,
that's what I mean.
It looks rehearsed.
It's
not
theater.
Like when you look at Rand Paul in one of those kind of hearings, and like you'll correct me on what kind of hearings these are. Senate testimony hearings, are they?
Yeah, Senate. Yeah, that is the Senate Banking Committee. Typically,
you see a Rand Paul and you see him question people, and it's authentic, and he wants answers out of them. He wants answers that are important to the American people. When Elizabeth Warren does it, she looks rehearsed. She's she's gaslighting us with the way she structures the questions is to get what she wants.
Well, remember, she is historic. She's a lawyer. Actually, I shouldn't even say that. Of course, she is a lawyer. Almost all members of Congress are lawyers. But she's a talented lawyer in that sense, and that's what lawyers do in court, right? I mean, the law is also basically the practice of litigation. The people that actually go in and try cases, not the other hundreds of lawyers behind that one person who do all the paperwork and stuff. But that takes a lot of, that's theatrical, right? And I don't want to blame. Certainly, Senator Warren's not the only person that uses hearings as theater. In fact, all the hearings are theater by definition.
I can't stand watching them at times. I've watched them because they show them on Bloomberg, and we have like a.
But this is another one. When that wing of the Democratic Party places a witness at the Senate Banking Committee, you know who they always get? Better markets. They always bring them. And it's not just on crypto. They are always there talking about, I've got to reform this part of the hedge fund. And it's always better markets if Elizabeth Warren's like sort of wing of the Democratic Party has a say in the guest, and they usually do. So like go back and look at all the times better markets. I mean, you'll find that like it's very aligned. And to be clear, that's fine. There's Better Markets is a political advocacy group. There's tons of them. It represents a specific political faction.
All right. Well, listen, look, I think we've done enough. We've covered enough. Amazing, weird. Like, it's been a weird week, weird 24 hours.
Let's go Pirates.
Yeah, yeah. You guys here tonight? Yeah, you're here tonight.
We're here
You here
tonight.
tonight?
Yeah, I'll be back tonight. Yeah.
Well, I guess this is in the past. Everyone who's listening to this, whenever this comes out, know
We'll put it out-
know
we'll
We'll
put
be
it
that
out on Saturday.
all right,
Yeah.
know that James did an awesome job at PubKey on Thursday night.
Yeah, James crushed.
He crushed. He truly did.
Am I up there with you?
I think so.
All right.
Yeah.
Oh,
Round
Pete
two.
and James, they crushed.
We crushed. All right. Thank you, Alex. Thank you. We didn't get a wrap, but, here's what it is. Thanks, James.
Next time.
Thanks, guys.
Yeah.
This was fun.
All right.